and start to look at what's coming in 2015 and beyond. The Middle East, I could put little signs on this map to show you where all the flashpoints and trouble spots are, but then you wouldn't see anything on the map. You wouldn't see any borders or know where the countries are. The Arab Spring has turned into something quite dangerous, quite simply. And so far, the major conflicts, and the conflicts are all over this region, whether it's a civil war in Libya, unrest in Yemen, the Islamic State in Iraq and Syria, the Iranian nuclear issue, the Gaza war this last year. So far, most of the conflicts have avoided the economic centers of the Middle East and North Africa, and in particular, the Persian or the Arabian Gulf, whatever you'd like to call it, the oil center of the region. So far, the conflicts have avoided that, and that is why, yes, these conflicts are in the news all the time, but they have not had a major impact on oil prices. Think about it. Oil prices have fallen. They've just fallen 30%, and yet there's all these wars going around just around the periphery of where most of the world's oil, much of it, is being produced. I'm not going to get into much, but the war with the Islamic State is going to continue in 2015, and until they find, until the coalition of U.S., Western, and Arabian countries are able to find ground forces that can deal with the Islamic State, this conflict will continue well into 2015 and could destabilize the wider region. It could start to impact Turkey more, could even spread beyond the borders that we see there. The key economic risk in 2015 that we see is the same key economic risk that has faced the world for the last couple of years, and that is trouble in the Eurozone. What that chart there shows you is Japan in the late 80s and early to mid 1990s, and the Eurozone in recent years. And why does it do that? Because there are a lot of parallels between what happened in Japan beginning in 1992 and what's happening in the Eurozone in recent years. Japan was the richest developed economy in the world going into 1992. Its growth rates were extraordinary, much higher than in the Eurozone, but nevertheless the underlying weakness of the Japanese economy was there. The population was shrinking rapidly. The working age, the consumer age population was shrinking dramatically. So Japan was becoming ever more dependent upon exports for its growth, and it was losing export competitiveness. Same thing is the case in the Eurozone. Eurozone, in many cases, populations are shrinking. Working age populations are shrinking. Consumer age populations are shrinking. So many Eurozone economies are ever more increasingly dependent upon exports. But again, the export competitiveness of many Eurozone countries has fallen sharply in recent years. So you get what you have today. You have economies facing deflation. The threat of deflation in the Eurozone is real. I've been talking, if you've seen me speak a few years ago, I was talking about this years ago. This is a real threat. When you have shrinking consumer spending, you have shrinking demand in consumer markets, you had an overvalued currency until recently. Deflation is a serious threat, and deflation has persisted in Japan for 21 years almost. And in the Eurozone now, the overall inflationary thing is 0.4%. Some countries are in deflation already. The threat is real and is likely to be in place for some time. It's a good thing the euro came down. We've been arguing for a long time that the euro needed to be weaker. The euro was dreadfully overvalued. It is a positive development. But nevertheless, more has been done to really fight against deflation in the Eurozone. Why? Because demand levels are so weak. Domestic spending, in the Eurozone is 5% smaller today than it was before the crisis. So any growth that's been recorded in the Eurozone has come from exports. The domestic demand levels remain far too weak in the Eurozone. Won't touch too much on the Ebola outbreak on this, but the Ebola outbreak is continuing. On the positive side, the international community has done a very good job in preventing it from spreading beyond the borders of the 3 countries impacted. However, they've done a dreadful job in preventing the outbreak from worsening in these 3 countries. The death toll is over 5,000. It will double in the next probably 6 or 7 weeks. It is an outbreak. It's something we need to remain vigilant about, because if the virus were to spread from these countries to the big cities in the region, like Lagos, Nigeria, or if it were to get somewhere else to the major cities of India, places like that, it would then have the potential to spread far beyond its borders and become much more dangerous. And then finally, for key risks, the situation in Ukraine remains totally unresolved, and many of Russia's neighbors that have large Russian ethnic minorities, whether it be Kazakhstan or the Baltic states, are looking very warily at Moscow to see if they're next on the list of Moscow's efforts at redrawing the borders within the former Soviet Union. So, nothing but bad news. I have to talk about something positive. let's talk about some opportunities. Where is growth going to come in 2015? You've had nothing but positive news so far, so let's turn this around and let's look, where is growth going to be driven for the global economy in 2015? Well, we're in the middle of one region, North America, and it's finally, this has been a very tepid recovery at best in North America. It's taken a long time to get back to growth, or at least back to healthy growth rates. Even with the growth, interestingly, we're forecasting the U.S. economy, for example, to grow at about 3% between 2015 and 2019, 3.1% on the average. That's pretty good, but nevertheless, that will mean that the last 2 decades will be the first time in U.S. history that average economic growth has been below 3% for 2 consecutive decades. So yes, things are looking better, but nevertheless, this has been a long period of underperformance by the United States economy. The Chinese domestic market, we've talked about this a lot in the past. China is rebalancing from being an export-dependent economy to one that's increasingly driven by domestic demand. And so where is the growth going to come from China in the future? It's going to be consumers inside China. If you look at the retail sales chart there, even though the Chinese economy is gradually slowing, retail sales growth remains firmly in double-digit territory. And 12–13% growth per year in the retail sector in China. And where is most of this growth coming from? From the major cities in China. The urbanization of China continues. We just recently did a study for Ferrero, the chocolate company from Italy, on 56 Chinese cities and urban areas for selling their products in China. And it's just amazing the growth that's being achieved in many of these Chinese cities, many of which people outside of China are probably completely not familiar with. This is really, if you're looking for one place where the global economy is going to grow in the coming years, it's in urban areas in China in 2015 and beyond. This pertains for all markets. A fast area of growth is the global elderly market. Right now, there's a little over 200 million people over the age of 65 living in developed economies. That means living often with lots of spending power. That number will almost double over the next 40 years to over 350 million people over the age of 65, just in developed economies alone. So this is one area, even in countries like Japan, Southern Europe, where we're not seeing much growth, this is going to be a growth market. This is one that companies are going to have to increasingly tailor their products and services to, because this is where so much of the growth in the future is going to come from. One area we're very confident, I'm very confident, is Southeast Asia. This is a region of 660 million people, so it's half of China essentially, and it's growing at about a little more than 5% per year. That's quite impressive. It's a very diverse region. You have one of the world's richest countries, Singapore. You have much poorer countries, but nevertheless, this is one region where a lot of investment is going. And with the Philippines and Indonesia and Vietnam all forecast to pick up growth in the coming years, this is going to be a very strong growth market in the years ahead. And then agriculture, one other area I just touch on briefly. This is one area, it's like the elderly market. It's just going to keep growing. The demand for food is accelerating as both the global population rises from a little more than 7 billion to 9 billion in the coming decades, as people become more affluent in emerging markets. Agricultural exports are going to boom, and those countries that can profit from that are going to have a lot of opportunities in the coming years.